it's Jeanette Johnson with Jeanette Johnson with Century 21 Connect Realty. However, if you don't know anything about
That's
what it
super
takes,
daunting, especially when it comes down to the inflation.
and always remember to mind your business. Hey everybody, and welcome back to Mind Your Business Show. I'm Jeanette Johnson with Century 21 Connect Realty.
And Isaiah Lyles with Primerica Financial Services.
All right, let's get started.
Let's get
Back in the mind. Okay, so we have an exciting episode actually for you guys because we have our first special guest, but we will get into that shortly. But we are talking about the topic of investing. And it's kind of a broad topic, but we're going to touch base on some of the things and tips and tricks that not only Isaiah, our financial professional, has dealt with, experienced, and does on his own, but also our special guest who has done some investing in real estate. So we can kind of, let those worlds collide, give you some tips and tricks if you want to do this yourself and you want to explore it. I am not as well versed in this topic, so I definitely wanted to bring somebody who is and see what you guys drum up. I feel like we're going to have a really good discussion in here.
We're going to get a good conversation going, because there's, like you said, there's so many different forms. And when you hear the word investing, especially nowadays with social media and everything, there's so many different forms, so many different ideas, and so many different ways to go about it that the word investing is almost like an umbrella. So
yeah, it is an umbrella, and we can dive into so many different angles of it. So I think you guys are gonna have me in here for a treat and everybody else. But nonetheless, also just why we wanted to do this on topic and about mind your business as our show. It really is to help all ranges of your guys' experience. You don't have to own a business to be a part of this podcast. You could also just want to expand and make some extra income and find different alternatives on how to do that. So this topic is really important for the people who aren't necessarily business owners, but maybe want to just get some return on their money. So yeah, let's do it. Let's bring in our special guest. All right.
Hello.
That was smooth.
That was really
That was very
They call me
smooth.
silky smooth,
Okay, here we have Brett Silkenbakken.
Perfect.
Welcome in.
Thanks
Give
for
us a little
having me.
introduction for yourself, Brett.
My name's Brett Silkebakken. I've been officially in real estate for 7-8 months now. I mean, I've been into it for like a decade in the sense of that's when I found out about investing in real estate and things like that. So I've always had an interest in it and been in it for a while in that sense. And then finally, I just thought it was time to do what I love. So I left my old job, been here half a year now, and that's how I'm here.
Okay, do what
Nice,
you
nice,
love.
nice.
Perfect. And you are also a coworker here with me at Century 21 Connect Realty. So that's fantastic. Kind of on the same boat with that. But we're going to ask you both kind of why did you get started in the business? So Brett, take it away. Why did you get started with being an agent? Let's say that.
Yeah, so you kind of got the backstory of how I've always been into it on the investing side of things.
Mhm.
So then it kind of came from a selfish place where I could get access to the MLS myself. I could save 3% myself. So that's kind of how I originally was thinking about it. And then just one thing led to another with my job. It was kind of in this lull, and I was almost had my license, and I was like, no, there's never really a good time to make a huge life decision, but what's going to ever be convenient? It'd be now. So I just committed to it, and here I am.
And go deeper on what your job was before.
Oh, before, I called myself a babysitter, but it was a construction supervisor, basically, where we worked with the FAA, and they would, anything from putting carpet in the boss's office to building an actual runway and everything in between. I was the guy, 5 guys watching, 1 guy digging the hole. Yeah, I was one of the guys watching. That's it. Couldn't tell them how to do it, what to do, just to make sure no one blew themselves up and report what they did.
So you were
Very
just,
easy.
you were
It's
just
better than
there,
digging the
hanging
hole.
out.
Better than digging the hole.
Yeah, exactly.
And how'd you kind of get into that career path?
Well, it was weird. So I went to school and became an engineer, civil environmental engineer. And then my dad works for that company in a completely different sector. He had a friend doing this, and I just graduated college. you need to get a job.
So you're like, I guess. This
talk
fits
to this
the bill.
guy, and it's like nothing to do with engineering or anything. But it's like, oh, the pay was good, and it's like, oh, you're gonna give me per diem? What the hell's per diem? And it's like, you're gonna pay for my food? What? I get to keep the extra? I was like, where do I sign? So that's just how that happened, because it's nothing to do with my degree or anything. So I just kind of did that, and then it was just easy, so easy money. I just stuck with it.
Yeah, that's funny because now you're in real estate, which is also nothing to do with your
exactly, yes.
your educational background.
My engineering parents are so proud of me.
Looking at you like, are you okay?
Exactly.
Okay, so you would pretty much say, and I don't want to say like you're the average guy, but you kind of had the average path in life, and you were just kind of doing what you thought might elevate yourself. Mm-hmm. Okay, perfect.
Go to school, get make good grades, graduate, and get a job. That's traditional path.
Traditional path, yeah. So, Isaiah, you had a similar path.
The traditional way.
Yeah.
Yeah.
So tell us about it. What kind of got you to where you are now with Primerica?
So I also had the traditional path of like going to school, go to college, attempt to get a job once to get out of college, but I never made it to that part. Because my story started with I started being an entrepreneur in 2014. So I was like a sophomore in college. So I've been doing in and out of different type of businesses, doing different type of work, very non-traditional work. Because I was also a brand ambassador. So I traveled from state to state, maybe a different country, marketing products and marketing companies at different events. So I got to taste that per diem. I know what you're talking about. Oh, yeah. We call that extras. But if I knew what I knew now, invested those extras. Yeah. That's a different story.
I was going to say, your brain is elevated to a different degree at this point.
Yeah. But I started off on that path. And my next step, once I graduated from college, I was studying for the LSAT. I was going to go to law school. My goal was to be the next Rich Paul, be a sports agent. So I got into this company, I started my investing path like a couple months before I really graduated. So that kind of got me on the track to investing and got me like really introduced to this world. And then from there, I got introduced to this company, and then that made it make so much sense. It's like, oh, you can get licensed for this? Oh, you can get paid to save your own money? Oh, that's an incentive to save your own money. So and I also always wanted to help people. I've always wanted to build my own business and just stay on that path. So that kind of got me today.
Okay, and break down your licenses as well.
Okay, so I have a Series 6, Series 63. That's investment talk for. I'm a retail investment broker, as well as I do life insurance. I also have a mortgage license, so insurance license, investment license, mortgage license. Multiple states around the country. So I help people in that area of their lives in different sort of ways, and I try to make a big difference in a lot of people's lives.
So help people put their money where it needs to go so it can grow.
Show you how to make your money work for you.
Yes. Gotcha. Okay, cool. Now, Brett, why did you start investing specifically in real estate? Because was that your first like attack at it, or what was your first? And then answer the question.
My first investment, I mean, technically I had some little bit of change in stocks and whatnot, but as for like a first significant contribution, probably real estate.
Okay.
It was actually kind of got a 2-for-1. It was about 3 years ago. I was looking for my house, I guess, but I wanted like a little duplex or something to house hack, rent one side, live for free in the other kind of thing. Up in like Kennesaw or by a college or something where find tenants easier. And it was right when, the COVID market was just taking off. So we putting in offers and offers and losing. And then it just kept developing and everything kept going up. So the original budget, I think, was like 2 to 250. And then I was like, okay, now we're in the 3. Now we're in the 350. Now we're looking in Roswell. Because of the girlfriend too at the time. And she's just like, I don't want to live here. This place is better. But so I ended up finding my house, and then like 3 days later, finding this perfect little condo that would rent well too. So I kind of, like I said, I got 2-for-1 at the same time, basically.
Nice.
So then technically bought my house first, and then like 3 days later closed on the condo.
So
That'd
he
be
also
hectic.
was shopping in a very unforeseen circumstance where interest rates were super low. So
Yeah, 2.9 is my house rate. So
yeah.
not 2.5, but I'll take it.
Oh goodness, God forbid. But ultimately you started, trying to find something to just specifically invest in, but also live in because you were trying to save money, or what was the mindset
make money
behind?
if I could find like a triplex or quadplex or something like that too.
Okay.
But
So
yeah,
you went
at
in
least
with the
live for free,
mindset.
because how much
Yeah.
money do you spend in rent or mortgage? Thousands of dollars. Now
Yeah.
times every month for years, like that adds up quick. So if I got someone else pay that, think how much more money I could have for investing or food, because I eat a lot.
Yeah, but your mindset was like, okay, I need somewhere to live. So let me find somewhere to live, but let me also make money because, you wanted something other than what you were doing in your
Because
career
I was living
path at
in
the time.
Atlanta. I went to Georgia Tech, so I lived
Yeah.
in Atlanta for all college, and then a couple years after, it was like $2,000 or so a month for this
Ooh-wee.
like 500-600 square foot whatever. Like me and the girlfriend split everything, so it was $1,000. But
Yeah.
it's like for nothing. I was like, I could buy a house for this, and it's like, yeah, screw it. That's what I'm gonna do. So that's what started the whole thing. Moved in with my parents. It took 10 months before we finally got my house because the market went nuts. But yeah, live with your parents. I saved a lot of money doing that.
Pro tip.
We've done the same.
Pro
Pro
tip.
Don't be too proud to go back to your roots to figure it out. But let's talk about like your worlds colliding, because obviously we have two paths of the spectrum. Yours is more of a direct path. I'm in this field of business and I help people elevate, and you also help people, obviously being a realtor, do the same thing, because you can help people house hack and everything if you want to. But just on a personal level, where do your worlds collide? I know you've said you've dabbled a little bit in the stock market and things like that.
Now.
A lot of it now. So yeah, let's have like an open forum here between you two, because I don't want to just sit here and rail you guys with questions. Let's get talking.
All right. So I guess I would say, number one, I need to get into the real estate investing world. That's something I definitely have always wanted to do, and all because it makes sense, especially what you were saying. That kind of resonates with me because I had a roommate in college. Shout out to TP.
TP.
Yeah. But no, he got his degree. He ended up getting a house out of college and then renting out some rooms and everything so he can hack and really live for free. And next thing you know, getting more properties and more properties. And I'm really proud to say that because he blazed the path for as far as like people I know and the people I kind of went to college with and kind of grew into the person I am today with. So the real estate world of investing, that's definitely always intrigued me, but I kind of started off in well, I guess you got a question for that later, but as far as like just way more risky bits of investing, because
Penny stocks.
Oh no, cryptocurrency.
What?
Cryptocurrency.
Oh, same thing in my head. Sorry to trigger all you coin guys.
Oh yeah, that's good. we go fight in the comments later. But yeah, so I got into cryptocurrency, and that was like my initial like investment world.
Which
of
ones?
Bitcoin, and then there was the Litecoin, the Ethereum. There was all those type of things, but there was like these bots and stuff that were supposed to put your money in and let it grow for you, compounding 1% a day.
I had a very, very brief thing with crypto. I don't understand it, nor I guess really care to. I don't whatever. But Coinbase, I don't know if they still do it. Would give you like $100 or $200, a couple $100 or something. This is a few years ago to like make an account and like take this 5-minute video course. You get $10 in Litecoin or whatever. So, and there's a bunch of them. So I got like $100 or something. Liquidated it all and threw it all into Shiba for giggles.
So
and then it like tripled overnight. So not like it's a lot of money, but I just sold it for like $500 or whatever and took it and ran. That's all I got. Crypto wise.
Did you get started in like the crypto world because it was user friendly, or because at the time it was just like the hype to talk about the hot topic?
At the time, it was like on the rise, because this is like when Bitcoin was, I want to say, at about 2,500. So it was like really, it might have been cheaper than that. So it was like really cheap, and it was like really getting that momentum and really on the early stages of getting to be like, okay, widely known and widely talked about. So I I was making some money at the time. I was in college. And I had the money, and I was getting my refund checks too. Ooh, and used to get a lot of money from them refund checks
too.
Yeah.
I was gonna say you went to Georgia Tech. You probably didn't get any of those refund because you went to. Well, I guess they're both still state colleges, no? Or you're private?
No, state.
Yeah,
okay.
Yeah, public. Mm-hmm. But yeah, so got the refund check, had the money I was making over the summer, and then it was the idea of, okay, there's this thing called Bitcoin. You can invest your money in it, and it's gonna grow, it's gonna be this, that, and the third. And I was just like, okay. I didn't know anything about investing at the time, so I was very skeptical because I didn't pull the trigger and really dive into it until it started really rising. And then I'm like, okay, let me see what I can do. Then I put money into this little platform, and then they're supposed to, oh yeah, we're gonna double your money in a day, 1% a day, compounded. I'm like, compounded? I don't really know what that is, but it sounds good. It sounds like it's gonna be higher than what it was. So it seemed like a good idea. But the thing about that, what I learned is, there's waves when it comes to investing. There's waves, and you're never gonna catch the beginning wave to the end of the wave. You just have to catch your segment and ride whatever.
What is it? It's not timing the market; it's time in the market.
Right.
Okay, so what's your advice? And you both can answer this because we talked a lot about, obviously you're breaking down your experiences, but you touched on a lot of stuff that essentially, no, you didn't answer the question at all, but it's okay. We'll come to it. We will come back. But you guys both were touching on a lot of stuff that essentially seems a little intimidating and scary. And, you even said it when you first started, you didn't know anything about it. So you kind of were just going based off of what you were hearing, maybe some things you were seeing, and then you had to learn along the way. So what's your advice to, some new people, some people who are new to this, have no idea what we're really even talking about here, but have a, slight interest? What's your advice to those people? What to do first?
What's that acronym? It's like KISS, keep it simple, stupid, or something like that from school. Yeah, because crypto as your first investment is definitely more on the risky side, but keep it simple. You don't. There's these S&P 500 funds. It's just a general basket of like the top 500 companies, and I don't know the tickers off the top of my head, like FXIAX or something like that. It's the Fidelity one, but you can just put in the search bar S&P 500 and just put your money in that, whether it's $100 a month, $500 a month, whatever. You don't have to do like trading futures or doing options or shorting a company or deep diving analysis. Like, just do that. That's it. That's all you have to do. And you can set it up to be automatic. Like every month you're going to take $200 from my account, and you can even tell it where to put it. So you never have to even log in again if you don't want to. But like, it's just that simple. You don't have to get overly complicated, which I think a lot of people get lost in the sauce.
Is there something that
he knows what he's talking about?
Is there something something you've like when you were starting? Were you reading articles about this stuff? Like, what was your first introduction? And then you said, okay, let me do my own research and find this platform to invest in it.
Well, given my math brain, I guess, kind of thing. Same with the real estate when I first got in college, and always number goes up. That's a good thing. So I've always had that mindset.
You're like,
I've never had a problem budgeting or saving or whatever. Like, so I know a lot of people struggle with that, but I've always been into it. So I just watch a lot of different YouTube videos from real estate to stocks or whatever, and you just kind of start getting familiar with the lingo and kind of get a gist of it. And then I was like, okay, it doesn't really matter. You want Fidelity, you want Vanguard, just pick an account. It doesn't matter at the end of the day. All that matters is you're actually contributing to it. So just pick one, and then, like I said, they all have their own version of their S&P 500 fund, and just put in that, easy peasy. And then if you're really into it, like me and some other people, then you can start to branch out and buy an individual stock that you somehow came across one way or another that you like. But just keep it simple, and then get more complicated if you want. But
okay,
yeah.
What about you? What's your advice? And I know you said he knows this stuff, so obviously he was touching on some things you probably know about as well. So go ahead.
Yeah, so I was on the opposite end of that spectrum as far as like I was getting better at learning how to budget and learning how to save, but I didn't really know what I was doing. And so I kind of got introduced to this company, and then that's when I started learning about things like mutual funds. And that's like exactly what you're saying as far as like keeping it simple. You got all these different type of holdings that is inside of one fund, so you're not racking your brain as someone being new to the game and not really knowing what you're doing, trying to say, okay, do I want to invest in this stock? Oh, is this stock going to go up? What's happening with it? That's intimidating.
And if you're scared to invest in something you like I was always into gaming and stuff, like you can get a gaming ETF or mutual fund and invest in that. I literally have that. So it doesn't necessarily have to be some scary thing. I mean, if you like something, odds are someone else likes something. So find a stock or a fund related to gaming or whatever it is and invest a little in that.
Yeah. So I'm the exact same type of way as far as like, I didn't want to put all my eggs in one basket. And I tell people, you don't want to have all your eggs in one basket, because if that basket breaks, then all your eggs are done. Eggs are expensive. Yeah. So what we need to do is make sure that we're just diversified, and just like you, with a fund, it's easier to diversify. But just like you said, the main thing is just doing it. Main thing is just putting the money in and getting started now. Because one thing, especially if you're younger watching this, then you have time on your side. Time allows for more compound interest. And the market is always going to be doing up and down. It's going to be that wave. It's going to be up and down. But you need to be able to have the discipline to invest consistently. Because you might say, oh, I don't want to invest this month or the next 2 months. But at the same time, a major event can happen and the market might tank. And you just missed out on that month.
But that's a good thing when that happens. Because people, it's going down, it's red, I'm losing money, and they like panic sell or freak out or whatever. But when Target has a 25% off, you go, oh, I can't buy this shirt now, and you go, oh, no, I'm gonna buy 2 of them. So that's same with stocks. Like I just see it's on sale. Like I like red days.
That's what I say. Yeah,
because if you actually, Black it's not Friday some sketchy company you heard about on TikTok or something. Like it's an actual Microsoft is down 10%. It's like, oh, okay, that's gonna go back up before some obscure thing happened and the market overreacts. I'm like,
buy.
But yeah, the dollar cost average, red days. I love red days. I'm at the point where I can't even buy on a green day now because it's like I know I can get it cheaper. But
So what are you looking for specifically? I know you're saying, okay, if it's down, don't freak out. But if you're watching your accounts move and fluctuate, obviously, which can be the most intimidating part about it, what are you looking for, and what can give you like that peace of mind in knowing, okay, it's okay, don't freak out, it's going to change?
I'll say literally don't look at it. I know people that just, they can't handle seeing the red, especially if it's like a couple of years ago, we had a lot of red for a little bit and stuff. Like, don't look.
Even though the country's on sale, it's Black Friday for the whole country.
Yeah, I mean,
everything's on sale, so it's like,
yeah, there was a lot of red days after like a year or so into it, and I was like, oh, red. It's like, oh, now I'm actually significantly losing money. You don't lose unless you sell it, but and then it's just, so I kind of built up the fortitude of being able to handle it. But at points at that time where I was like, stop looking at it, because I know long term it'll be fine. Like Microsoft isn't going anywhere or whatever it might be. So it's like, just mentally, if you can't handle it, just don't look at it. I don't mean that as a mean thing. Like, don't sell it. You're just going to lose money. Yeah, don't look at it.
Don't watch paint dry.
Yeah, not for sure. Just, I would say you always got to start with your goal in mind. What's the goal for this money? Give your money a goal. And as far as like, let's say it's retirement. Okay, so you're not supposed to be touching this money. So say I'm 29, so you got like at least like tell them 59 and a half. So I got at least 30 more years before I need to even be thinking about it. So why are you looking at it? Why are you worried about what it's doing now? Just make sure you're contributing, because, like you said, one of my favorite keys, dollar cost averaging. By being able to invest consistently over that time frame, the market's gonna go up, the market's gonna go down. It's gonna do what it does. So you want to be able to be in a position where you're collecting shares. Okay. So when that time does come, okay. But if you have like goals in mind, that kind of keeps you on track of like, all right, this money is for emergencies. This money is for buying a house. I want to get into the real estate investing world. Okay, so
that was going to be my next question, and we can kind of touch back into how these worlds collide.
Okay.
Can any of these, resources or things that you're investing your money in be used for another investment like real estate? Can you kind of bounce one off of the other?
I mean, there's REITs, real estate
investment trust.
Yeah, so you can invest through real estate that way. Depends. It depends on the person and the risk tolerance, because I'd say for most people, just put it in like a high yield savings account and keep it there, because there could be a bad month or something. But I am a little riskier on the side. Like I still had my house money invested in just like a mutual fund or something. Nothing like one stock or anything crazy, but a little riskier. But I wanted to make more money, and I had the tolerance for it at the time. But if you're really, really worried, like here's my 20 grand for the house, put it in your American Express at 4% or whatever. No chance of it going down. You do that.
Okay.
Yeah, I would say I use money markets instead. So yeah, but
well,
you want to
explain that because you're very high yield savings. We have these conversations often.
Mm-hmm.
So
yeah,
how do you feel about that?
All right, so how I feel about it is I don't fully always endorse a high yield savings account only because I know that a lot of these financial companies are preying on the average investor, the average person who really doesn't know what they're doing. So they feel like, all right, if it's because it has the word high yield on it, that's a high yield. And that's not the case all the time.
Like high yield is like 0.3% when rates are 2% or whatever. That's nothing.
Like, I'll never see that. Thanks.
Past performance cannot guarantee future.
Is that your disclaimer?
Oh yeah, I gotta get my disclaimer. It's not indicative of future results, and I am not. This is not a solicitation of anything at the moment. But all right, so let's get into it. All right, so because you got the high yield savings accounts, and then they give like 4%, some are up to like 5-6%, and I'm like, okay, that's good. Anything over 1 is good. As far as like getting gain, especially if you got your money in your mattress or just using cash, because you need to get your money growing for you at the same time. But when it comes down to really investing and really trying to put some money together for the future and really want some growth and want that money to work for you, a lot of these companies, they don't tell you that you can get 20% or better. You can get 40% or better, like on these type of on investing in specific things. Mm-hmm. And as a person that's being young, of course, like there's different situations that come about when the person's age or what stage they're in. Maybe you need to be invested in bonds. If you're a little less on the risky side or you're a little bit older, you need to be in something a lot less risky. But if you're like us, young, hey, I'm aggressive all the way. So I'm going to invest in something that's going to give me those returns, that has the opportunity to get the 40%, the 45%. I know there's a fund that's happened during COVID, did 47%.
And you help people put their money in these.
That's where your money at. So that's where your money at. So yeah, I help people put their money in these places and get those opportunities to get these better rates of return, so they can really understand how money works and they can really get the growth. Because there's something called the Rule of 72 that's going to essentially tell you exactly how long it's going to take for your money to double. And if you don't know that, you need to get the basics first. What I would say with somebody who's starting, get the basics. Sit with somebody who can like teach you the rules of the game, so you can then move forwards in a way that you can really understand and make the best decisions for you. Because you're saying everything that I would say. I'm gonna say I didn't even need to be here today. So
yeah, I'm actually interviewing for your job right now. So we'll see you.
Yeah, right.
We got spots. But anyway, but I would also say it's like one thing when it comes to our worlds colliding. You want to sit with somebody like me first, so you can learn the rules, get invested, get your money growing for you, get your money working for you, and then come see somebody like y'all. So
how to play with it.
How to play with it in different ways. Where can I put this? What can I buy? Do I need a single family home, quadruplex, duplex? What do I need? What do I need to get my investment portfolio a little bit more diversified? Because real estate market has only gone up.
Yeah, especially long term.
And it's not going to be any other way.
In general, for the stock market, just like real estate, everything just has up and down years or months or whatever. So I don't look at it if you can't handle it. But
it
long term, the graph is like this. There might be a dip here in 2022 or something, but just don't worry about it. Don't invest, your money you need for dinner or the electric bill tomorrow.
Yeah, don't do that.
It's a lot easier to say that when it's, money you don't need.
Well, you made a good point. You were already really good at managing your money, budgeting, and things like that. Right. And then, you help people kind of get on that scale first, and then we can get into more of a risk factor. So let's explain it. What are some of the scariest or riskiest investments that you've made in? And how did those things turn out for you?
Well, I guess there's that Shiba thing. It wasn't risky in the sense it was free money because Coinbase gave it to me, so if it went to zero, I don't care. But I guess I came up on top of that, like $500 or something. But I've also every now and then I'll find a like an individual stock and that I like or want to invest in, and I'll do that, which is more risky. And one of them went to zero. And I mean, again, it's not like I'm not investing every month into this. It's just like here's a little few $100. Like it's essentially gambling. Like it's like if this happens to hit, great. If not, whatever. It's just like my main investing, and this is just my side gamble thing. So I've never really taken a super risky investment like buying a condemned house and hoping it goes well.
Well, would you? Would you like it step? Can you take that?
I would like to, but I want to like baby step into it. I don't want to just a full, that needs a foundation and basically build a whole new house. Like I feel like that'd be too much for my first time. But I do want to buy because it's always don't buy the nicest house in the neighborhood, buy the worst house in the nicest neighborhood,
right?
And then give it some love and get that sweat equity in there, and then you can refi, sell it, whatever, rent it. But so I haven't made anything too risky other than kind of like fun money that went to zero.
Yeah.
But you're playing with house money at the end of the day, so it's like, okay. Yeah.
I never bet, here's my entire life savings. I really hope XYZ stock goes to 5 cents tomorrow and not zero. Like, no.
You're like, now I'm living out of my car.
Yep.
All on a risk.
This is how I lost it all. Record scratch, freeze frame.
Yeah, we do not condone those risks. Go ahead.
Yeah, so I guess my riskiest would be like the different things within the cryptocurrency ways. And I've also invested into time and energy effort into different businesses, but that's like a different form of investing. It's like paying money to get into this business and doing it, and now this business doesn't exist a year or two later. Yeah, but I feel like investing in yourself, you can never go wrong, but you can go wrong investing in yourself with the wrong company and just doing and oh my goodness, wake up now. Anyway.
He's having nightmares already. He's like,
flashback. Bring it back. But there was this thing called Hexabot and then the BCC machine. It was during the cryptocurrency days. And like I said, I'm playing with refund checks, and I'm playing with all the money I done saved up over the summer and everything. So I'm like, okay, put some money here, put some money there. I'm hearing these good things. I don't know nothing about it, but I'm hearing these good things. And this is before I got my license, all that.
Of course.
So getting started in those first couple days, making little gains. You're like, okay. Next thing you know, a week or two go by, you're getting your gains and everything. And I just remember with the Hexabot, I had put some money in there. I had put like over $100 into it at this time. Person in college with no financial skills, $100 is a good amount of money. So put the money in there, and then next thing you know, I go to log into my account. This was one of those you can check every day because it's supposed to grow every day. Log into my account, and for some reason it said like I had 23 Bitcoins and then 59 Litecoins, and at the time Bitcoin had made its way to 20,000, so 20 times 20 it's a good amount of money. So I'm like, whoa, how did this happen? Withdraw. You get that oops, something's wrong dinosaur that pops up. Okay, let me refresh the page, log in, withdraw. It's frozen, locked up. Everybody who ever used that platform got their whatever coins they had taken from them. So it was a big scam. It was a big it was like literally robbery. So we all got robbed.
And there was no way of being like, okay, yeah, let me look up this, because I know you said it doesn't really matter. These are big companies, so, find something to invest in. But how do you kind of avoid, because, see, that's where people start to think, I don't know what this thing is. Why should I put my money into this? I don't know anything about this. Like, how do you stop that? Do you?
Especially, I don't know much about the crypto stuff, but once it's gone, it's gone. That's all I know.
That's the thing. There's no way to reverse a transaction once it happens as well, just by the way it is. So it's like once you made it, there's no calling somebody saying, "Hey, this was an accident. An accident went to the wrong place," and then sending it to a different place that was a headache all in itself. because there's so many letters, numbers. It's over like 20 something letters and numbers in the wallet address. You got to get it exactly right.
Or it's going to somebody else's account.
It's going to somebody else, and there's no way you're getting it back. So, being a person who's definitely very new to the game of investing, don't know anything about it, that's not the way to go to get started. That's not, because if I didn't have the mindset that I had, like I said, I've been in business and been an entrepreneur since 2014, so a lot of my life. So I built up that mental fortitude to say, like, okay, if fail is not, you can just fail your way forwards. It's not just like, I'm never doing that again. And a lot of people have that mindset of saying, okay, this investment went sour. This left a bad taste in my mouth. I got that ick.
Yeah.
So never want to invest again.
And no one's got 100% success rate. Everything goes down. You're gonna pick good stocks, you're gonna pick bad stocks. Hassle property, a dream property. Same like the tenants I have now are dream tenants. I'm sure I'll have nightmare tenants at some point, but so there's no success without failure. So just especially with TikTok and everything, like I made $1 bajillion. I did this and that. And it's like one, did he? And then two, how many times did you fail before it happens? So everyone just sees the success.
So you would say, how would you say risk? Is it necessary?
Well,
no risk, no reward.
Exactly. So is it a scared money don't make money? So everyone has their tolerance. I'm not saying do anything stupid, but if you're younger, you can be a little more stupid.
You got time to make up for that stupidity.
Because I think it's like if you bid $400 a month at the age of 25, by the time you're 60, you have $1 million. So then $400, I mean, depending on your career and stuff, that might sound like a lot, but I mean, what's like the average car note in America right now? Like $800 or something? I'm talking. Quit buying a new Range Rover, just get your 03 Corolla or whatever and invest it.
Yeah.
You'll be multi-millionaire if you just keep doing that, or have the new Range Rover, choose your priorities.
Yeah, one thing I always tell my clients is the future is always coming. It's always on its way and it's closer every day. So you want to make sure you're planning for that. So just like you just said, just don't be smarter, have goals and be smarter. Do you want the now wow factor of like looking the part? And then when it comes down to being, when you really need the money, when you really want to be, okay, I need to take a break. I've been working 25 years.
Dying on the Walmart floor at 93 because you never saved anything. Yeah.
It happens every day.
People say retiring at 60.
Every day.
In my head, I'm like, 60? That's old. Like, I want to retire like 40. Or earlier the better.
I know, right? Like today.
So as long as my car runs or something, I don't give a crap. So I just put all of it in there into real estate and stocks.
Because that's the way it's going. Because there's going to be that day where work is optional. Everything, and you're going to have the lifestyle that you want, because just like you said, I mean, to max out a Roth IRA right now is $583 a month.
Yep.
So
$7,000 a year.
Yeah. And 25 years, I think it's about 24 years. You max out for the next 24 years.
$1 million tax free.
Yep.
Tax free. What more do you want me to tell you? Tax free. I don't know about you guys, but that's kind of what started the whole real estate thing, is deferring taxes and stuff like that.
He has a personal relationship with taxes.
Yeah, I worked for this. You didn't. Gosh. Yeah. And especially, at least for me mentally, when it comes to investing, like I have 401k, I have a Roth, and I have like a personal brokerage account. It might be easier to just start with a Roth and invest in it, because then it's for when you're 60. You don't have to think about if it's a red day or not. You just don't worry. Versus if it's in a normal account, like, down 5%, I should just sell it. But if you have it locked up in a Roth, I mean, obviously you still can withdraw it, but it's more of I'll be 60, so it's less tempting to withdraw it on a bad day. At least for me at the beginning, that's how I saw it. So maybe that'll help them.
Yeah.
Yeah.
And I always have the different levels of accounts that you do, because one thing I'm gonna do is like set somebody up with an emergency fund, and that's what I use as like a money market. So it can get some growth, but it's like not at risk.
Yeah, that should be first, because you lose a job or break a leg. I don't know, something goes wrong.
It's gonna rain.
Yeah, it's gonna rain. It happens.
The day is coming.
Hunky dory as it might be right now, it's gonna happen.
Yeah. And then move on to like having a short-term fund, and that's something that when it comes down to 3 to 5 years, if you want that new car, I don't recommend you get it, but I recommend you talk to them about getting a house, getting a property, getting invested in that sort of nature.
Pay your car note for it.
Build some equity too.
Then get the car.
There's so many layers and stuff. Yeah, you can have your rental pay for it. That'd be a smarter move.
Yeah, and then you got a whole lot more extra money.
That's how I do it. Once I get X amount of passive income from rent, then I'll go buy and whatever fancy little car. You know?
Yeah.
It's not like I could maybe go buy it right now. It's like, or put it here where my money will grow in appreciation. Plus, I'm getting cash flow and it pays
That's
for it. So
stemming
it's
from
free.
what you said. Set your goals. What is this money for? And then
Yeah.
you can kind of play off that, bounce off that.
Because-
So
I was about to just say, like, because one thing you just mentioned is residual income. I feel like you want to have like assets that are cash flowing you so you can have residual income. We all got residual bills, so we need residual income to take care of those residual bills. And, you know, I say rich residual income creates happiness. So the idea is to, if you really want to be happy, you want to, and live the life that you want, if you have that passive income, that residual income, taking care of these nasty necessities that we always hate paying. Who likes paying their rent? Who likes paying the mortgage? Who likes paying the light bill? Nobody.
That's why I want enough properties to essentially every month I get X thousands of dollars from all these. And I don't got to work
you're
anymore.
living
I'm going to
scot-free, yeah.
Japan for a month. Screw it. You
Yeah.
know?
You got those options now because you kept your priorities in line. You kept your goals in line.
Exactly. A
first.
sacrifice. Now I don't even call it sacrifice. I mean, it's
I
not
call
like
it
I'm
opportunity
in
cost.
danger or anything, but I don't
Yeah.
have some new car or whatever, like, which I don't really care about, but I know a lot of people need the newest and best
Mhm.
Yeah.
iPhone car or whatever it might be. It's like, I just want the cheapest thing that works and then put the rest there because then I'll be 40, sipping Mai Tais on a beach. And you're
And
like,
you'll
what's
be
wrong with me? How did you do it?
Yeah.
How did you do it?
I know I wasn't a CEO
like,
of a company.
You
I just
should
kept
have
throwing
watched
money.
Mind Your
I was like,
Business
you didn't
show.
watch Mind Your Business,
You
did
didn't watch
you?
Mind Your Business, and that's why you're here.
Because the future reward of just being able to do whatever I want, not have to work, is
Mhm.
just, in my head, ranks so much higher than any short-term satisfaction I can get
Ooh,
right
facts. I call it opportunity cost.
now. Yeah.
At the end of the day, what do you want? It's going to be the same money that you have that you're playing with right now. You can invest it in your future or you can invest it in your now.
Mm-hmm.
Just know now is a fleeting moment.
Yeah, because you get one go around and then it's like, oh, I'm 60, 65. Now I can finally retire and travel the world. Can you? If you're still able.
Physically.
And then even if you are able, like, how?
Are you enjoying it the same? You know?
I want one life. I don't want to spend it working. I want to work as much as I can now for a shorter period possible.
That's facts.
And then get out of town. Just live off that.
So give us some house hacks that either you started to implement, have implemented,
Where's my
or
notepad?
want to.
I need these notes.
Watch this episode back. Give us some views.
Don't tell them what we do.
So my house hack to... What was the question?
What are some house hacks that you've seen that you said, oh, I want to do this. I have done this.
Yeah, I mean, I mentioned the duplex, triplex, quadplex kind of thing where you live in one unit, rent the others to break even, or ideally, if it's a bigger one, you can make some money. And you can get like FHA and conventional loans and stuff like that for that. It doesn't have to be just a single family. You can still do that with them.
Mm-hmm.
So try to do that because buy a house with the anticipation of renting it in the future. Like the house I live in now, that's my house. There's no HOA. I can rent it. And it'll rent for more than my mortgage. So I'm not planning on staying there forever. It's just part of growing the portfolio. So that's how I don't buy some big fancy mansion because it's, oh, that's my dream house. Just like the dream car thing. Like, I'll get that later. It's fine. Right now we're grinding in the 20s because it's compound time.
Right.
And that plan can kind of mitigate, because I know a lot of people's problem, and I actually have a friend who's currently experiencing this problem. Just the mortgage is too high. They're not going to make any return. If they do rent out, it's going to either break even or they're going to actually still be paying for that tenant to even be living there
it's like,
with the interest rate. So if you are getting a duplex, you have that opportunity to actually make a profit.
it's better because you have 2 sides or 3 sides.
Right.
So you have double the rents,
Double,
triple
yeah.
the rents. And
Yep.
because a lot of single family or condos or things, like I still, keep my eye in there. It's at best it like breaks even now. So
Yeah.
it is a lot harder with the rates. So either you put more down or you got to find an off market deal or something like that. But even when I finally got my house here, which was completely opposite of what we were looking for, not a duplex in Kennesaw. But I still have friends from high school and stuff, like they would rent a room for me and I didn't charge like $500 or something because they're my friends and wasn't trying to rip them off, but at the same time, $500 off my $1,500 mortgage is a third of it gone just to have my friend live with me. And so then you put 2 friends in there or something. Now
Don't say $1,500 mortgage too loud.
Oh, sorry.
you just made some people cry.
But now I got like 2 of them or 3 if you know enough, and it's like I'm paying like $500 to live in a house that I'm gaining for $500, which was a fourth of my rent in Atlanta. It's like, yeah,
we talked about that the other day when you were like, oh, well, people need roommates. Have you ever seen that roommate style? It's like we all just chip in, get a mortgage, and buy a house.
Oh yeah, I think I saw a Zillow ad about that actually.
Yeah, the Zillow ad.
Yeah, where it's like, you know, person A qualifies for 100, B qualifies for 150. It's like they could all come together. It's like, dang, we down that bad now? That's how we're promoting it? Jeez.
House hacking.
And then it's very addictive, too, once you start. I know a lot of people have spending problems or budgeting problems, but once you start, at least for me, it was very addicting. It's like, save that emergency fund and put it in your money market or whatever. It's like, oh, look, $100. Like, I like that. And it just really rolled for me. And then you buy a house, it goes up in value, plus you're getting rent. And it just really, I don't know, when you see the numbers start to move, because especially now at 25 or 20 or whatever, 30, 40, I mean, it's never too late to start, but especially when you're young, it's like, oh, what's $100 going to do? By tomorrow, nothing, but you got 35 years to go. Exactly. Yeah. It'll explode.
But as long as you're making that return.
It's like, I'm not doing anything. It's been a year. I have, $1,500 in there. It's still nothing. Like, it's not even rent for a month. It's like, yes, it's good. It's nothing. Ignore it then. Just let it sit and keep doing it.
Keep that, yeah, for sure.
It will become something.
That's what I tell people. Like, all right, so there's the person who wants to put $100 a month away. And then there's the person who says, $100 ain't nothing.
I'm going to go out to eat.
I'm going to go out to eat. I'm going to go to the club. I'm spending, that's my drinking money.
Can I borrow $100 for
a year later, that one person who says, I'm going to put $100 up away, they got $1,200 at the end of the year. Mm-hmm. That person who said, no, that ain't nothing, they still got zero.
Yeah, exactly.
And
they expect things to happen overnight. It's not, I mean, you're not going to put $100 in a month for 2 years and have $100,000. Like, it takes some time, but you'll start to see it. It's like planting the seed, and then, at least with me, and then you'll start putting more in, and it just grows on itself.
Mm-hmm. Don't eat the seed.
Because, I mean, think about it. Most people don't budget, and even when they do, like, oh, I don't make enough money, which, I mean, if you don't, that's a different story if you can't pay the bills. But most are like, oh, I budget, and I still don't have enough. It's like, you go out to eat all the time. Like, these little things, like the typical, you went to Starbucks. Like, it's not the one $10 Starbucks. It's like it adds up.
We've talked about this. We've talked about
this. It's been so long since I've been to Starbucks, and I had this convention this past weekend. And
the other day,
I had to. Oh yeah. So I've been on the go like constantly. So I had to get my coffee out instead of like drinking it at home. Man, we had some terrible creamer. I wasn't messing with that. But so my cup of coffee costs $8 every day, and I was getting about 2 a day. So that's $16 a day over the last like 3 days.
Their prices went up so high. I don't even understand it. I went there and they had the 50%, and I still paid basically what I would normally pay for an average coffee after receiving the 50%. I was like, okay, we can't do this every day. This is a problem.
Yeah, that hurt my soul, because I'm like, it had been so long, and I was just talking about how it had been so long, because I used to drink Starbucks all the time, but then when you realize you might have drank a tank of gas and what you pay, not for real.
Yeah.
Really quickly in a week.
Same with going out to eat, like you said, is you go out to eat every day. I mean, goodness.
BS spending on Amazon crap, or really, because I don't know if any of you watch him, Caleb Hammer on YouTube. He does like financial audits of people from really bad to really good situations, and typically like,
you can always
find
the money.
Blah 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 blah, and then he has the breakdown from all their statements. It's like, you spend 27.6% of your income with $30,000 on Amazon BS, on going out to eat, and all these things. It's like, because I can't invest $100, $200, whatever. It's like, you can
right here.
Priority.
That's one thing in our field that we do. We call it finding the money, and
you have
it's always there. And it's crazy, and this is why I end up getting into it with people online, because I say some stuff, they get triggered. A hit dog will always holler. And then I just know the typical average American's lifestyle. When it comes down to as many subscription services you have, that's money right there. You can find the money in someone's habits, and where it's going is like where their priorities are. And if your priority is not on like the future, setting these goals and really growing the money and making your money work for you, then yeah, it's gonna seem like you don't got it, but you do. You do.
I don't know if this is a bad way to think about it, but I would just started picturing things like, if I spent $100 on this meal, what would that cost me 30 years from now? I was like, is this weird meal worth $5,000 to me? No.
I started thinking like that when I was working retail, and I was working at Adidas. I was just made it to $11 an hour. Woo.
Woo, big money, big
money, big money. And I wanted to buy a pack of boxers. And I was like, this pack of boxers cost me a little more than an hour of my life.
Yeah, you can put in that.
Oh my goodness! How much are you making an hour versus what you're? Some people spending their whole day of work really quickly on a night out to eat.
Yeah.
Just that quickly, or going to the movies, or just doing random frivolous stuff, or drinking it in a cup of coffee. So it's changing that mindset on it, and the way you're thinking of it. That's what's this going to cost me down the line.
Mm-hmm. We're not saying don't have any fun either.
Yeah.
I mean, there's a healthy amount, like 20% can go to whatever you want as long as you're,
plan for it.
I mean, 30% invested here.
Put it in a budget. Yeah.
Because by all means, if you can afford it, go out and drink, go out and buy the car, whatever. But most people just I can afford it in the sense I put it on a credit card, or I can use all my income and pay for it.
Every last dollar.
Yeah,
every dollar.
Yeah. Mm-hmm. No one has that control anymore. I feel like just slap it on the card, move on, and then you pay 30% interest.
Right.
Which is nuts. The stock market will get you 10.
That's another slippery, sticky
The rule of 72 can work against you just the same.
Yeah, that's insane.
The same.
If someone would take money from me at 30%, I'll give you 20. Screw it. Hit me up. I'll lend you money at 20. That's insane. I'd feel bad. I feel like I'm preying on you, but 20%.
I mean, that's what it is ultimately, overall. But how money works? Let's talk about it. I know you wanted to bring it up, and I feel like you should because we're on topic.
What aspect?
The book.
Oh, the How Money Works book. Okay, yeah. So definitely if y'all want to get a lot of initial knowledge, if you're just starting off in your journey and really need to know some concepts that can really move you forwards and push the needle and get you started on to making your money work for you, really learning how to do better financially, make better financial decisions when it comes down to the budget and the taxes, deferring taxes, making your money grow, making sure you have the right type of insurance, those type of aspects. I have the real How Money Works book, and then so if you,
which we'll link it.
Yeah, we're gonna link it in the description,
to download it,
so you can have access to it and we can get it sent to you. But yeah, I have a How Money Works book that teaches all these concepts, or we can sit down and do a one-on-one. We feel like in my company, financial literacy should be free. So sit down with us is free. Try to go somewhere else and do that, good luck. But yeah, so we have the How Money Works book. We have even a How Money Works book for kids, so you can start teaching the next generation that's coming after you better habits. Because I don't know, and I know in my community, our community, most of these concepts are not taught, never learned from ages 13 to even deep into the 60s.
You were in college and you didn't have any tools,
I didn't have any of that information until I was studying for the law set. I already walked the stage with to graduate. I'm like, I just spent $55,000. And I didn't get none of this. I took a finance class. What's going on here?
I think that's a very common thing on the Caleb Hammer show too. It's like I was never taught this or didn't know it. And I don't know if they do that intentionally to keep you in debt, but that is a very common thing most people don't know. I assume I'm just math guy, good with numbers, so I kind of was already putting pieces of the puzzle together how I can make more money.
So let me ask you this, Brett. Were you kind of like taught money concepts as you were growing up? Were you so how did you get to being savvy with saving and investing, budgeting? I mean, I know investing comes later, but you said that you were already pretty good with budgeting and saving and really making some good financial decisions. So how did that come about in your life?
Well, like I said, I'm always good at math, that aspect, but if you go way back, I remember playing RuneScape as a kid, and you'd get your coins, and it would grow. And like that, weirdly enough, that's what started it. Oh, more money, and then I just kind of bled into the real life thing. And both my parents went to tech, engineers, good with money and whatnot. So they, of course, I guess as well as you could to a kid or whatever, it kind of explained the things and whatnot. And then the biggest thing, I don't know if it's just because like I'm cheap, but I remember giving up the
frugal is the word.
I've always been like that, but it's really
better.
when like they took the credit card from, and when I was in college,
Your
it's like,
girlfriend's
I had to
watching and it's
pay.
like, yeah,
It's like-
yeah.
And like, do I want Olive Garden? And like, I don't want that. And like for $30, and that really kind of, I was always into it and knew about it, and then but once it was like all on me, because parents would pay for everything, so I had spare money to just throw in there. But once I had to pay bills and everything too, it was again the frugalness really set in.
Kicks in into high gear. You're like, ooh.
Because I would think about it as, exactly 30. And then, I was in college making $10 an hour or whatever it was. And it's like, that's 3 hours of work to get dinner. Like,
Yeah, so that was a self-discipline you
Noodles.
naturally were,
Okay.
having. But sometimes it takes people time to develop that, for sure.
yeah,
for
most
sure.
people like, that were on the credit card or whatever, because that's what their parents did. That's what they've always done. And
Yeah.
credit cards like, ooh, no interest for a year. We'll give you $500 if you spend $5,000 in 6 months. So it's predatory-ish.
Yep.
But,
Yeah, so it definitely goes deeper, and that's kind of what we're here to do, to tell you that it goes deeper. There's definitely different resources you can use, find out if you don't know. We got to stop making excuses, and we need to figure out how to find the solution and to work it out on our own. And that's, why I wanted to open this forum of discussion. And we thank you so much, Brett, for joining us. Everything that
Appreciate
you've
you coming
offered.
on. That was a great
Thanks for
conversation.
having
Yeah,
for sure.
wonderful conversation. So don't be shy. You can always come back to mind your business.
They always
Back
say,
in the mind.
one day I'm going to start the diet. One day I'll start investing. It's one day, or day one's today. You pick.
Yeah, you can have
Yes.
reasons or results.
Mhm.
Hey,
I love
reasons
it.
don't do nothing for you, though.
All right, well, thank you all so much for watching. As always, I'm Jeanette Johnson with Century 21 Connect Realty.
Isaiah Lives with Primerica Financial Services. Don't forget to hit that like button, subscribe, share with a friend. And if you, like we said, if you want the How Money Works book, it's going to be linked below. So just contact me or hit the link, and then we can get that sent to you. And let's keep an open conversation. Let's leave a comment. Let's see what you think. Because you might have something that we can learn from. We have something that you can learn from. So we want to keep this like really conversational and really open forum. Yeah.
And always remember to mind your business.